Breaking news on the screen with respect to the minutes of the MPC meet that has been released. They're saying that the normal monsoon could act as a mitigating factor and that the baseline inflation path does face many uncertainties. We'll break it down, but let's just start off by talking about the overall normal monsoon and what that could mean for an highly agri-dependent economy such as ours. Saugata, if you can hear me, we have the RBI that's released the minutes of the June 4th to 6th meeting of the MPC. Yes. They've all voted in favor of a policy decision. How are you reading into this?
Well, I mean, this time it's not that much of a humdinger because all 6 members voted to hike rates at this point in time. So obviously, I mean, I still haven't seen the language of each of the individual members, but I can imagine that there would be some common threads. So one would be to try to get ahead of the curve because inflation was running off quite dramatically. Financial market conditions had turned very adverse. Interest rates had gone up. So I mean, the members, I'm quite sure with the individual minutes would have deemed it correct at this point in time. To signal that they are ahead of the curve in terms of setting rates in the market. Yeah.
So, okay. Saugata, I'll just fill you in with more details, from what we're picking up right now. The deputy governors are talking about how the high oil prices are going to impact disposable income as well as inflation, that a neutral stance will help the Monetary Policy Committee to be flexible, and that baseline inflation, the path of that is facing a lot of uncertainties. Particularly wanted your comments, though, on a comment coming in from Mr. Patra of the MPC. He says the prolonged pause on rates dents the credibility on the CPI's aim. Given the fact that we had seen the overall inflation figure for the month of May come in at about 4.87%, this of course after the RBI went ahead and hiked benchmark interest rates for the first time in 4 years. How are you reading into this comment?
So first, I mean, we had initially expected that Dr. Patra and Dr. Acharya would be the members who would be voting. We were sure that there would be the members who would be voting for a rate hike because Dr. Patra has been voting for a hike the last 2 meetings, and Dr. Acharya had the last time round indicated that he was willing to withdraw accommodation in the policy. So exactly as we mentioned before, I think it was very important for the members to be seen, the MPC members to be seen as not falling behind the policy curve. Exactly as you said, that with inflation coming on at the levels that they had, it was very clear for them that they needed to hike. The second point in this, which was a surprise in the policy, was the maintenance of the neutral stance, and that is one of the reasons. Because as you can see, oil prices have already come off a little bit, far more sharply than we had expected, very quickly. So, I mean, the current economic financial markets environment globally and in India are way too fluid to take a very rigid conservative stance. I mean, as you mentioned, the neutral stance allows them flexibility to move either way. So, I mean, if oil prices keep on hardening, if the monsoons turn out to be not good, food prices increase, etc., then the MPC is free to further hike rates. But on the other hand, if prices actually begin to come down moderate, then they might actually hold for a long time. And although the prospects look very, very doubtful at this point in time, very low, in case not everything goes right, that inflation begins to come down very dramatically, then there is the chance of a cut at some point.
Madan Sabnavis also with us, and Saugata, request you to stay on. The RBI had spoken about in their monetary policy forecast that inflation is expected to stay between 4.8 to 4.9%. We have more details emerging from the Monetary Policy Committee meeting right now, and they are talking about how the prolonged pause on rates is denting the credibility on the CPI aim, and that a neutral stance helps the RBI, rather the MPC, to remain flexible. What are your thoughts on, how you would read into these comments in light of the way the inflation numbers have only been escalating?
See, the way I look at it is that the RBI was aware of it. When I say RBI, I'm talking of the Monetary Policy Committee. They was aware of the fact that inflationary expectations were building up. and it was very likely that the numbers were going to move in the upward direction, something which was probably vindicated when we had the last CPI inflation number coming in. So that was one of the reasons why since monetary policy is supposed to be forward-looking, so therefore action should be taken before the event really takes place. So that's why the RBI has actually increased the rates. Now, they've also taken a neutral stance, and I have a feeling that the idea of taking a neutral stance is that it's more a case of deferring any further comment on it on the basis of saying that there is a certain bit of information which should be flowing in. We're not quite sure what's going to happen on the oil side. We're not quite sure what's going to happen on the minimum support price or the monsoon side. So therefore, let's take a pause and not actually worry the market by taking a hawkish view. So therefore, you take a neutral stance, because we actually felt that it's not the policy rate to change, but there would be a hawkish stance taken. It means something bordering on caution, saying that we are expecting inflation to go up. But I think the RBI did a kind of a surprise by actually increasing rates and then took a neutral stance. So the only way we could do is that, okay, I don't want to spook the markets right now by taking anything more drastic. So we say, okay, this is a particular measure which we have taken because inflation is going up, but we need to reassess as to how inflation is going to move in the future. And accordingly, we're going to take an action on that. So that's the way I would have read into what the MPC members were actually thinking of when they did give this final opinion of a neutral stance with a rate hike.
And they had clearly mentioned that they will keep an eye out on the impact of crude oil prices on inflation, along with several other risks that remain. And they have acknowledged the fact that high crude oil prices are on the rise and that they will impact the disposable income as well as consumption. What are your views on this?
No, absolutely. I think this is, if you look at the various risks to inflation, I think we agreed the last 3 or 4 policies. I think all those factors have been really delineated. So they have not really changed. It's just a case of saying that, okay, they spoke of fiscal deficit, they spoke of oil, they spoke of the pricing.
Then appreciate you taking the time out and joining in, giving us a view on some of those comments that are coming out of the MPC meet that the Reserve Bank has released. And more importantly, now they're saying that the medium-term CPI forecast has moved closer to 4% and the CPI medium-term forecast has moved away from 4% and it's moving closer to 5%. Oil does continue to remain a bit of a risk, and the inflation rise has